Hello everybody. So one interesting aspect of most of the business schools in India is that you typically study for 1 year and then do an internship 2 years and then return back to college. That is exactly what I'm doing right now. I finished my first year at Trichy. I'm working, doing my internship right now for 2 months here in Hyderabad. So one interesting aspect of my internship is that I have other interns from other premier business schools who join me, who are co-interning with me. So it gives me a great opportunity to talk with them and get different perspectives on a day-to-day basis. One such person is Pranav. We work in the same finance team on a day-to-day basis. We talk a lot about finance. So I took the opportunity and invited him for the episode here, and he gracefully accepted it. So Pranav, thank you so much for taking the time to join us today.
Thanks for the opportunity, Rahul.
Thank you, Pranav. So a small background about Pranav. So Pranav has about work experience of around 2.5 years in the finance domain, and he's currently pursuing his MBA from IIM Visakhapatnam. So Pranav, can you give us a small intro about yourself?
So, as you mentioned, I'm currently pursuing my MBA from IIM Visakhapatnam. Before pursuing my MBA, I used to work as an equity derivatives analyst for a hedge fund based out of Mauritius. So, I used to take care of these capital market related things for the hedge fund, specifically in equity derivatives.
Okay. So your designation sounds a little fancy. Even for a finance person like me, it does sound a little intimidating at first. So can you break it down and explain what your role actually means?
Okay, I'll try to break it down
Yeah.
in more simpler analogy. So, the position had two words, right? Equity and derivatives.
Right.
So we'll begin with derivatives.
Okay.
So what a derivative is? So as the name suggests, derivatives is something, or a derivative is something which gets its value from something else. So that something else can be equities, can be commodities like gold or crude oil. It can be in some real estate,
Okay.
anything,
Any
that,
asset, any asset.
any
Right.
asset that can be termed as a derivative.
Derivative. Okay.
And the value for it is derived from that
Underlying asset.
We call that underlying.
Right. Okay. So that is derivatives. That is one
Yeah.
part of the thing that you
Correct.
worked in. So can you give me one example of what derivative? You explained me the term, but can you give me one example where derivative can be explained more simpler? For example, equity can be used as a derivative, right?
So again, equity means
Stocks, right.
So today, if some stock is trading at 200 rupees and you think price for that stock can shoot up to 400, 500 rupees in later stages. So what you do is you make a contract with counterparty, again in the securities market, that you'll be buying this stock for, let's say, 250 rupees
Okay.
at the end of maybe this month. So there are expiries for this contract. So one expiry can be this month. So you make the contract with the counterparty that you are buying that security for 250 rupees at end of this month. So even if the price for that security shoots up to 400 rupees, you will be able to buy that at
Okay.
250 because you had made a contract with the counterparty earlier that you will buy it at 250 rupees.
Okay. So in this example, you said you'll buy it again later, right? So
Correct.
what is in it for that player? Why does he have to sell it for 250? What incentive does he exactly have here?
That player can have instinct that that security can fall to 100 rupees. So
Right.
he thinks that if he sells it at 250, it will be an advantage for him.
Okay.
So this is how markets also work.
Right. Okay.
Somebody is in fair, somebody is in grid,
Okay.
and the exchange of securities happen. So,
Okay. So ideally, one person is saying this will be the price. You're saying this will be the price. So if it's here, you win. If it's there, he wins. That is what derivatives basically is.
Correct.
Okay. So you work for other clients, is it? How does it work?
yeah. So what happens in this industry, particularly hedge fund industry, is you pull funds from HNIs and then you invest or trade these funds. So if we talk about HNIs, so what HNIs are? HNIs is acronym for high net worth individuals.
Right.
So if we break it in India terms, people who are having net worth of, I think, more than 1 CR are termed as HNIs in India.
Okay.
So you take money from HNIs and according to their risk and reward, whatever they want, you put their money in whatever schemes that you have and you try to generate some returns for them.
Okay.
And from the generated returns, you take some cut, which is your profit, and the rest of the money is client's profit. So
Right.
this is how this industry more or less works.
Okay. So it's mostly commission based, is what you're saying. Your profession is commission based.
So if we again break it down, this industry more or less works on 20-80 model.
Okay.
So 20% people charge off 20% profits as the performance fee,
Okay.
and 80% is again like returned back to the investor, whatever
Right.
profits are made. So if you
Okay.
make 100 rupees profit,
Oh.
the fund manager takes 20 rupees, and 80 rupees profit is what the
Client, the
or
client
the
based.
client enjoys.
Okay.
And again, there is a performance fee which we explained, and there is a management fee aspect as well. So for managing that 100 rupees, you take a fee of 2 rupees. So 2% is the standard.
Okay.
So you take a fee of 2 rupees as well as management fee, because you are managing that 100 rupees, and whatever profits you make some X percent out of it as your performance fee as well. So this is how this market works.
Okay. So prior to getting into a contract, or let's say client comes into business, do you like tell him that this is the percentage that you can expect to receive? How does it work? How do you pitch to your potential client?
More or less, we try to show them the historical performances of our
Organization.
We name it series.
Okay.
So we try to show them performances of our series. We have different series spread across according to the risk
Okay.
that those series carry, and we showcase them that we have these many offerings which have this kind of risk and this kind of reward, and you can choose whatever you want. Like, if your risk appetite is less, you can choose a less riskier scheme. If you have a good risk appetite and you want great returns, you can choose that series.
Okay.
So this is what we showcase, and we show them historical returns and whatever drawdowns were there historically, and this is how we showcase.
Okay. So you briefly touched about risk and reward. As finance students, as MBA students, we know the correlation between risk and reward. But let's say anyone, a user, a viewer who's looking and hearing the terms for the first time, can you explain the concepts of risk and reward and how that typically works in your industry?
Okay. So if you are putting 100 rupees, how much rupees you are able to lose in the markets is what we call risk. So if you are comfortable losing 20 rupees, we call it as your risk. So 20% is your risk, and against that 20 rupees, whatever amount you are expecting, that you are ready to lose 20 rupees, but if you are gaining, you want to gain 40 rupees. So that's a reward that you are expecting, right?
Okay.
So that 20% is your risk, 40% is your reward,
Okay.
and your ratio becomes 1:2. So your risk to reward ratio is 1:2 for you.
Okay.
So
Okay.
this is
Okay. And I think the reward and the risk will more or less reduce as you grow older. No, when you're younger, your risk appetite is more.
exactly.
You can take more risk.
You
basically.
start getting responsibilities once you grow, and
Okay.
like you start your family,
Hmm.
and then you have some EMIs to pay and all. So your risk appetite starts decreasing. So
this must be the same for your clients as well. Younger clients will probably want to take more risks.
yeah, younger clients are free to take more risk, but it's not true always.
Okay.
Because our clients are HNIs and ultra HNIs. So ultra HNIs already have a good amount of money. So sometimes it also happens that they are ready to take good amount of risk, but they are expecting some like exponential returns against it.
Okay.
So we have that kind of clients as well, and we try to deal with them as well.
Right. So what does your day look like at your work? What do you typically do in one day? Is it more of client interactions, or how does your day?
Not really. My work is more related to the funds that we are managing, right?
Okay.
So again, usual day starts with reading about the business news, whatever happening globally, what happened overnight, what happened in the US markets. We try to analyze everything before starting Indian markets. Once we are ready with all the news and whatever is happening yesterday, we take a look at all the data of option and futures, the option chain. We analyze the charts as well for the securities that we are trying to trade, and we set up our setup, and again we start trading at 9:15 usual time, and we try to see the opportunities that are there, and we try to get maximum reward out of it.
Okay.
And again, day closes at 3:30. Then we close the accounts with all the trades that have happened. We reconcile the trade, we match the trades, we try to see whatever profits that we have made,
Okay.
and then we accommodate those profits to the clients through the various accounting mechanisms. So
Okay.
this is what more of how our day looks like.
Okay. Another interesting which I wanted to know was, so you are an employee, let's say at a firm. Are net worth individuals allocated just for you, or how does it work? Like, let's say 5 individuals are allotted just for you.
So
you work just for them, or as a team do you collaborate and
it
work?
is different for every organization. So what usually happens is the organization pulls money from the HNIs, and a trader or a fund manager gets to manage that particular pooled fund. So in some organizations, it also happens that a fund manager is responsible for a particular series. So he manages funds in that series. So whatever money comes in that series, he is responsible for that. So that money can come from n number of individuals as well.
Right.
It can come from a single individual as well.
Right. Okay. So we talked about derivatives. Another thing that you mentioned was futures. So what are futures exactly?
So I explained derivatives with an example of futures only.
Right.
So that's an example of futures.
Okay.
So if you want to get an example again, so imagine that you are running a restaurant and you know onion prices keep fluctuating. So you know today onion is trading at 20 rupees, but you think or you get some insider information from a farmer that onion's gonna get costlier and they're gonna be priced 40 rupees in near future. So what you do is you make a contract with a farmer that I'll buy 100 kgs of onion from you at 25 rupees.
This and those date I'll get it from you.
This date I'll get it from you.
Okay.
So even if it shoots to 40 rupees, you'll be able to buy it at 25 rupees.
Okay.
So you'll secure your
Right. So what are options then?
Options are little complicated is what people think, but they are not really complicated. So we'll again try to understand options with an example.
Simple
This
example, yeah.
example can be a little tricky.
Okay.
So just pay attention towards it. Right? I'll try to explain it in very simple terms.
Right.
So suppose you are planning to buy a house or a flat worth 50 lakhs, let's say. So in order to buy that flat, you see that there is a site which is undergoing construction and you will get that flat after 3-4 years. What you do is you go to the builder, give him a token of 1 lakh rupees and ask him that I'll buy this flat in near future at 50 lakhs rupees. For this, I am paying this 1 lakh token. Over the time, what happens is, because if there is some big revolution happening in that current, like the area of that residence, it may happen that 50 lakh ka price can shoot up to 75 lakh once year as well.
Correct.
So if that price is rising, the token that you paid 1 lakh, its price will also rise. Because you bought it for 1 lakh rupees, somebody else will reach you and ask you that I'll buy that token from you for 2 lakh rupees. So you'll make 1 lakh rupees out of it, and that person will be able to buy that flat as 50 rupees.
Okay.
So it is a kind of double derivatives.
Okay.
So we had that term in engineering, right? If you remember derivatives and integration.
I was a BCom student, so you're asking the wrong
there is a term double derivatives in engineering.
Right?
So futures is first order derivative, option is a second order derivative.
Okay.
So option is a derivative of future which is a derivative of underlying. So here you are making money by selling that token that you bought. You are not selling any contract. You are just selling the token that you bought. So you are making 1 lakh out of it. So you are making money out of it. So this is how options typically work.
Okay. Everything looks complicated. Why do you want to complicate it? Can't you just get stocks and try to find out good stocks and just make profit out of it? Why do these exist actually?
Yeah. So if you make money out of stock, you'll be not able to make exponential returns. If you see here, your token of 1 lakh became 2 lakh. So you made 100% returns over there. Similar happens in case of futures and options. Also, stocks, there is a limit. You can buy X amount of stocks only in, we call it delivery.
Okay.
Because liquidity issues are there, you are not able to buy big amount of stocks in a single go. That's why exchanges introduced futures and options.
Okay.
So you'll be able to buy bulk amount of that security or that stock, and you'll be able to sell it as well.
Okay.
And again, tax benefits are also there for futures and options. So let's not go there, but these are few things because of which futures and options exist, to make some good money out of it. Not just simple returns, but try to get exponential returns out of it.
Okay. So again, retail investors do this as well. For example, I use Kite for my trading. I get stocks, I sell stocks that on personal level. Can a similar retail investor get into options?
Yes, definitely. Options and future markets are open for retail investors as well. So when you're opening your demat account, your broker might ask you if you want to open futures and options as well, and he can ask for some proof of earning. So you can just submit your 6-month bank statement or an ITR return, and they'll enable futures and options segment for you. But we don't usually advise retailers to directly step into futures and options. It may look lucrative. It may look like you can make 100% to 100% out of it. There are Telegram channels and Instagram channels who are showing you that. But that's not the case every time. Even if you open your trading app, you'll get a notification from SEBI that 9 out of 10 retail investors are losing money in equity, sorry, futures and options.
Futures.
So trade mindfully. So that's a case.
Okay.
If you have proper knowledge, if you have studied for 4 or 5 years, then only you can enter it. Then only you should enter this and trade according to your risk appetite only. Don't
Okay.
overtrade.
Okay. So comes back to education, like you mentioned. So your background is from engineering, right? Like you mentioned. So how did you manage to switch into the finance domain?
In the first year of engineering itself, I figured out that
Engineering is not for me.
engineering is not for me.
Okay.
So I started exploring other domains. The
Okay.
first domain I explored was capital markets.
Okay.
So fortunately for me, it was an era of COVID. So I had
Okay.
ample amount of time.
Okay.
So I started learning about capital markets again from YouTube and
Complete
some
self-study
books.
for you.
Complete self-study.
Okay.
Then I started watching business news every day in the
Okay.
morning in lockdown. We had no other time pass, so I used to turn on Z Business and watch it for again complete 3-4 hours in morning, 3-4 hours in the evening, and try to understand what exactly happens in this industry. How are people making money out of it? And whatever jargons I used to hear, I used to note down those jargons and again put it on YouTube and try to learn about that jargon in more depth. So through that I came across futures and options, then particularly options. Then I read about options. I understood what options can give you, what extraordinary returns options can give you. There is a potential over there.
Okay.
And it is interesting as well because a good amount of maths is involved, good amount of logic is involved. You actually need to make decisions out of it. Like if I'm doing this can make me this much returns, but this can cost me this much risk as well. So you need to take a decision as well. So it tests your patience, it tests your logic, everything. So that was interesting, fascinating for me. So this is how I came through the industry. Then fortunately I got some internships out of it, and I converted that internship into job, and this is how I came in the industry.
Oh, nice, interesting. So you're a smart guy. You manage to find things on your own interest. But right now, even in my college, anyone who wants to get into the finance domain, a CFA is a common course which is suggested by everybody. So what do you think of CFA? Should people actually pursue it to get into the finance domain?
It is helpful, definitely. Like you'll clear all the knowledge about capital markets through the CFA course.
Okay.
You'll be able to understand everything, even this derivatives. There is, I think, 10-15% weightage in CFA level 1 for
Okay.
derivatives. So you read everything about things happening in the capital markets if you are preparing for the CFA. So it helps you get theoretical knowledge. For practical knowledge, you have to step in. Like you can't learn swimming without stepping into the water.
Right.
So similar here as well. You have to step into the markets. You have to trade out of your own money. You have to lose your money. I'll be more honest, to learn the markets. You have to, like, losing that money is paying fees to the market. You pay something to the market, and if you do it constantly, if you trade constantly, if you learn from your
Experience,
mistakes
yeah.
constantly,
Yeah.
that experience is something which you get in reward.
Okay.
And you can cover up that money that you have lost in the market, and you
Okay.
can make a good amount of money after it as well. So
Okay.
consistency is the key.
Okay. But let's say someone from the industry, do people look at people differently? For example, you're from an engineering background. So let's say someone with an expertise of, let's say, 10 years, do they look at you differently from an engineering perspective to someone who's just finished CFA? How do you think the difference is? Do people actually judge you because of your CFA degree there, CFA course degree?
At entry level, yes, but after that, what matters is your experience. Once you are getting into a conversation with somebody who has, as you said, 10 years of experience, he understands whatever you want to tell from your experience only.
Okay.
Like theoretical knowledge cannot give you that edge which experience can give. So once you break through that conversation, you can showcase your experience. But again, a sad reality is to get through that conversation, you need something like CFA,
Right.
or let's say MBA that we are pursuing.
Okay.
That's also one of the reasons why I'm pursuing MBA. So
Right.
yeah.
So you brought up NBA. So can you talk about IIM Visakh? It's been, I think, 1 year since you started college, right, as well. So can you share some of your sweeter moments at IIM Visakh?
It's a beautiful campus, I'll say.
Absolutely.
And it is termed as Sunrise IIM because we are on the East Coast. So Sunrise is first in the East, and
nice.
Our college is something from where we can see sunrise. Sunrises are beautiful in IIM Visakhapatnam. Apart from the campus and all, faculties are really, intelligent faculties. They are helpful at the same time. Student activities that are happening in the college. We have our own e-cell, which
Nice.
is incubating good amount of startups.
And you're part of the ESL
I am
as well.
part of
Nice.
e-cell as well.
Yeah.
So we have our own angel network as well, based out of Visakhapatnam. I am Visakhapatnam only. So we are trying to provide startups opportunities to raise funds as well. That's a completely student-run angel network as well. And IIM Visakhapatnam itself is a good experience. Like, you'll get experience across sports, cultural activities, everything. So I'll definitely recommend, if someone is like aspiring to join IIM Visakhapatnam, it will be a good experience for them.
Right. That's amazing. So for your second year, you're looking to specialize in the finance domain itself, right?
Yeah, like, we don't have that terminology as MBA finance or MBA operations,
right.
similar.
Yeah.
But the subjects that you choose, they give you your major and minor.
Okay.
So I have already taken
Fixed on finance
subjects, and for minor I have taken strategy subjects.
Nice. That's nice. So one last question which wanted to ask about you is, what do you think the trend is going to be for the domain for the next few years? For general, the finance domain or for the investment domain, we see advancements in technology, AI, etc. So what do you think? How do you think the industry is going to look over the next 5 to 10 years?
AI will be there. So the things that are done manually right now will be replaced by AI. Some reconciliation tasks are there. Whatever things that are having manual intervention for repetitive tasks, AI will take care of that tasks. Automation will happen. Let's say I'm trading something today. I can just ask Claude to write a code for it and automate it. If I have a system, I have a structure, I can ask AI to code it, and AI will trade on my behalf. So these advancements are going to be there. But it's not a threat, I'll say. If you don't use AI, that will be a threat. But a person using AI will be an advantage.
So how do you think we should equip ourselves for it? You said using AI. Can you give one example, or how we should be, try to implement AI with us?
Some example, like, if you have a trading setup, if you are waking up at 9:15, trading something, closing your desk at 3:30, you can structure it. Go to some AI agent like Claude or ChatGPT. Ask them to code that. Using an API, you can automate your strategy, and then you'll not need to wake up and trade same thing. You'll just need to monitor what your AI is doing. They'll make money for you based on your logic again.
Right. So you always need your skills and your expertise there. It's not
you
that
need that. That's something humans have advantage over AI, right?
Right. So it's more of a collaborative effort, is what you're saying. Humans with AI will work perfectly.
That will work
Perfectly. So I have a few rapid fire questions, so you can quickly answer them. So first is futures or options?
Options, they are high risk instruments, but they give you massive rewards as well. So options.
Okay. Biggest beginner mistake?
Emotions. They don't take care of emotions. They just trade out of greed. So that's the mistake that individuals made.
Okay. Best skill to stay for long in the markets?
Again, I'll say control over your emotions. Only. Yeah.
Okay. Again, the similar question. AI in markets, threat or an opportunity?
Massive opportunity. If you involve your logic with that AI, it will be an opportunity.
Okay. A controversial question. Bull market or bear market?
I am someone who believes in a philosophy of sonarchy, ekloharchy. So I'll say bear market.
Bear market, you can.
Like, you can make, if you are a trader, you can make good amount of money in bear market. So I'll say bear markets.
Okay. So what is the most overrated finance buzzword?
Consistent returns, guaranteed returns.
Okay. And most underrated finance skill that you think?
Control your emotions again. I'll say that's the key aspect. You need to control your emotions in order to be successful in this capital markets industry.
Okay. On a lighter note, are there any finance films, shows or films which you'd recommend?
There are good shows. So as everybody knows, Scam 1992 is there. It teaches you good things. It again teaches you how you should control your grade. Apart from, there was some movie named Bazaar. It was also a good movie.
It's a Hindi film, Bazaar.
Hindi film.
Okay.
And if you take a look at Hollywood films, you have Margin Call, you have Big Shot, you have Wolf of Wall Street. These are really good movies and shows.
Nice. Okay, Pranav, that is pretty much I wanted to cover today. We spoke a lot. We started right from the basics, and one key takeaway for me was emotions. We don't usually link finance and emotions, but like you mentioned, emotions play a very important part in finance.
Yeah. Like, if you are a trader, they may play a massive role. If you are an investor as well, you should keep your emotions under control, you should have patience. Patience will give you good money in longer terms. And if you're a trader, then too you should have complete control over your emotions. Then only you'll be able to follow your setup or structure and make good money out of it.
Right. Okay, Pranav, thank you so much, and all the very best for your internship and your second year at IIM Visakhapatnam.
Thank you for the opportunity, Rahul.